Hello and welcome. You're watching us here on Chartbusters. I'm Mangalam Maloo. With me today is Hormaz, and what a stellar morning this has been for the market. A big move on all the frontline indices, but the biggest move has been reserved actually for the two new listings, and in that itself, DOMS Industries saw a stellar debut, listing at a near 77% premium to its issue price and continues to hold higher as well. We have Santosh Rasiklal Raveshia joining us now to discuss the company's post-listing strategies. Thanks a lot for joining in and congratulations. It's been a stellar listing, almost 80% higher over your ask price here, and of course there was strong subscription as well. But now that there has been this bumper listing, it also comes with a lot of responsibility, sir. Could you give us a sense of, the growth rate that the company can maintain going forward to justify this bumper listing in terms of return to shareholders?
Thank you so much, sir, for your good wishes. For us, it's an extraordinary moment for the entire DOMS family today. We are, as I've said always, we're very accountable people and very responsible people. But with this particular traction of people believing in DOMS, the current emotions are very mixed, full of happiness and full of responsibility. What we are here looking forward, as we have grown in last 10 years, our average CAGR was about 20%. We would be very optimistic on following that particular route of managing at least 20% across the years ahead. The opportunities look forward are great. There could also be a very positive up on the top line and bottom line as well. But what we want to really address very primarily is the 20% historical CAGR.
Right, Mr. Raveshia, good morning. Thank you so much for joining in. And firstly, many congratulations. It's a big day for you, as you said. I'd like to ask you about your manufacturing facility in Umbergaon, and you had some expansion plans there. What is the current capacity, A? And once this expansion is complete, what is the capacity likely to be? And also, if you could share the utilization levels there as well.
So today, we have 13 manufacturing plants in Umbergaon and one manufacturing plant in Jammu. So what's extraordinary about DOMS is that we produce the entire product line what we sell. And also, the very important highlight here is that everything what we produce is also backward integrated to the extent. So here right now our capacity utilization is about ranging from 85 to 93%. So the important core categories like pencils, we are right now utilizing 93% of our capacity. What is very important for us is that we have around 200,000 square feet plus construction just about to complete and partially completed. So we are bringing in new additional manufacturing abilities and our expansion on existing categories as well as writing instruments. Also, a very good news which we had in January, where we acquired a 44-acre of land in the same vicinity of Umbergaon where we operate right now. And on this 44-acre of land, we are looking forward to set up a writing instrument manufacturing facility combined with the possibilities of markers, highlighters, sketch markers expansion. The proceeds what we've received from the listing, which is 350 crore, out of this 280 crore will be utilized to fuel this particular growth in that new plant, and the remaining 70 crore will be used as an GCP.
So I remember the last time you joined us, you did say that this 450 crore capex will yield a turnover close to around 3 times. That's roughly 1,500 crores of additional revenue. By when does that overall accrue? And at the peak utilization, what would your margins look like? You're talking about 20% CAGR on the top line. Do your margins inch towards 20% as well?
So we've always been very focused on attaining, more market share. So currently we are at a market share of around 12%. And going forward, we are in our journey of attaining market share to the the maximum. So we are optimistic of maintaining our EBITDA margins to the tune of around close to 16%, and because we operate in very diversified categories and have opportunities across different categories. So for now and for near future, we see a 16% of EBITDA as a very respectful prospects.
You said you aim to increase market share. It's 12% right now. The leader there is ITC with 20%. Do you have any aspirational target of what market share do you anticipate over the next couple of years?
So I'm sure, basically this Indian stationery market right now is valued at around 38,500 crore, which is likely to grow in around, in 5 years to 70,000 crore. So for DOMS as a company, which is today the fastest growing company in scholastic art and scholastic stationery, would not want to miss any opportunity going forward. And looking at, our aspiration of 20% CAGR over another couple of years, I think a very respectful market share is awaiting DOMS going forward.
All right, Mr. Raveshia, we leave it at that. Thank you so much for joining in and wish you good luck as a listed company as well. Looking forward to interact more often. That is the management of DOMS Industries. What a stellar listing. 80% almost as a premium to its IPO price of 790. That was the management of DOMS Industries. But let's shift focus now to our special